Hey everybody, I hope everyone's doing well and had a good day. This is the overview of the Emini 5-minute chart for Friday, November 22nd, 2024. I usually record these after the market closes, but I have to be somewhere tonight, so this is a little bit early, but it doesn't make much of a difference, so let's get into it. Today's Friday. Here's the weekly chart. Several legs up in a tight bull channel. We've been above the moving average on the weekly chart for a lot of bars, only dipping below here and here briefly. But the problem here, now we have maybe 3 or 4 legs up. This bull bar in particular, a little bit climactic. It's big, it's occurring late in a trend, lots of overlap with these bars, and then it had bad follow through. So think about the breakout. Breaking out of this swing high, but then no follow through. That's disappointing. And if you think about it, any trader who bought up here hoping the breakout would succeed, they were trapped on the bear reversal. This bar is strong enough that the odds were it would get some sort of second leg, even if this is reversing. In other words, this bull breakout probably needs at least a double top before it reverses. Because of that, traders might buy the midpoint of the bar and we may rally for a small second leg. But the problem for the bulls now is we have trap traders up here. Bulls who bought, disappointed. Let's say they bought the close of the bar. They're disappointed with their entry bar. And what are they going to do on a retest? They may look to exit their longs. So you may have bulls selling up here. Bears are always selling. The bears will sell hoping this bear breakout gets a second leg. The problem with the bear bar is that it's totally overlapping the prior bar. And when you really break it down, what's it breaking out of? It's still within the prior bar. So yes, it broke out from the close of the prior bar, but it is a 50% pullback, and it looks like we're going more sideways here. But if I had to guess, I would suspect we have sellers above the bear bar, sellers at the high, and a second leg down likely after that bear bar. Here's the daily chart. Again, several pushes up. Climactic bull breakout, but losing momentum. Then we have a deep pullback sideways. The market's deciding because now we need a second leg to the upside, but the bear breakout will likely get a second leg as well. Looks like we're testing higher, but look at the momentum here. At least here, the bulls had a big gap. That's a breakout and follow through. Here, decent bull bar, but then sideways. Small gap, sideways, close the gap. And then another bar, sideways. So the bulls really losing momentum. The bears hoping. We have a lower high major trend reversal, bull trend, trend line break, retest, and now we have a lower high. Bears hoping we turn down here, maybe fall for measure move down and test the bottom of the buy climax. Bulls want the opposite, upside breakout, measured move up. But for now, looks like the moving average relatively flat. Lots of trading range price action here, here, big up, big down, lots of sideways. So to me, looks like we're in a trading range. And with all of that, that's sort of the expectation going into the day. This whole week has been very sideways. And here's the open of the day. So a very small gap. We can assume Globex went sideways. It doesn't matter. Now, I say it doesn't matter. I always check Globex going into the day. But what I'm trying to say is when the gap is small like this, it really doesn't matter if the Globex chart looks like this, big down, big up, or if it looks like this, very small range. Either way, if there's a small gap, we went sideways overnight. So you can always assume with a small gap that we had a trading range overnight. I'm more inclined to trade looking at the Globex chart or the extended hours chart when there's a big gap going into the day, but with a small gap, I'm okay with just looking at the regular hours only. So bar 1, bull trend bar, and first of all, going into the day, just look at what we have here. We have this rally, and there's open gaps, these highs and these lows, and then another gap here, this high, these lows. And so what's happening, the market's in a trading range, yes, but we have a rally with open gaps, another rally with open gaps. And what happened, let's see here, what happened if a bear sold above bar 1, hoping for a trading range on bar 39, hoping this would be high in a trading range. They got trapped. Now, if they didn't panic, we had 3 pushes up. A bear could have scaled in, sold more higher, and look what happened. Exit at break even on their first entry during 58. And another chance here. So my thought going into the day was yesterday's high was actually support, at least temporarily. And think about it. We rallied above, trapping traders below. We tested it. It was support. We tested it again. Now the bears want the downside breakout. And of course the bulls want the opposite. They want support here. But I thought more likely we're in a trading range with trap traders below. And the sell-off did not look too impressive into the close of yesterday. 3 pushes down. An overall trading range, maybe 1 pullback, 2. So bar 1, bull trend bar, closing on its high. Also crossing the moving average. So breaking out above the moving average, the prior 4 or 5 bars. Strong enough for a second leg, but we're in the middle of a trading range, fairly tight trading range. So rather than buy the close or buy above the bar, traders may look to buy a pullback. A couple of breakout points we may test, maybe bar 81, maybe 78. Any of these highs will likely be support. The market may test any of these highs, breakout points, and then rally for a second leg. And look at bar 2. That's exactly what we got. So bar 2, we tested the breakout point of the 81 high and found buyers. Bars 1 and 2, strong enough for a second leg, but we have a big bar on 1 and then a smaller bar 2, which pulled back. So it's already 2 legs up. We're getting to the top of a trading range. And then 3, another big bull bar. So we have a big bar, a smaller bar, and a bigger bar. Ideally, in a breakout, you have bars that are uniform in size that don't pull back like bar 2 pulled back. Ideally, you don't see a big bar, sort of range expansion, then range compression, then expansion again. That's sort of climactic behavior. You think about a smaller time frame chart, it's almost certainly 2 legs up at least. 1, pullback, 2. And if that's 2 legs up and we're attempting to break out of a trading range, the risk is we may have more traders selling up here. Also, the tail on the top of bar 3. This is something that took me a long time to really almost believe, or at least maybe pay more attention to. And that is the close of the bar, and especially with tails. Look at bar 17 yesterday, 16. Basically closing on its high, closing on its high. It's more of a problem when there's tails on bars because in a bull breakout, you want, if you're expecting higher prices, then the expectation is that traders are buying, and they're buying into the close of the bar. Bars should be closing on their highs. So we rally on 1, pull back. Rally on 2 and 3, pull back again. May seem a little bit insignificant, but that tail is important information. Bar 3 broke out of yesterday's high, and I may have called this yesterday's high. That was a mistake. Let me just I'll turn this blue. The blue line is yesterday's high. And the bulls have a breakout. That's good, but of the entire rally, only this much from the blue line above is actually breaking out of the trading range to the left. the bulls still need follow-through, and that's their follow-through. So that may be minimum follow-through on TradeStation. It's a perfect doji close, so the bulls did the bare minimum. They prevented a bear close. That's good for the bulls. This rally will likely get a second leg up. But the problem is the follow-through was the minimum, and the minimum is hardly ever the best. And we're still overall to the left in a trading range. You can argue that we have an expanding triangle too. Maybe 3 pushes down there. Maybe 2 or 3 pushes up. So this is a problem for the bulls, especially when you're not getting follow through on bar 4. Because overall it looks like a trading range, we're not breaking far above the range. This will make traders more interested in buying pullbacks rather than buying the closes of bars or above bars, especially a bar like 4. It's a trading range bar, probably sellers above. I said 1 through 4 is still strong enough for a second leg, and that's true. But again, because it's a trading range, breakouts typically get deep pullbacks, and the second legs are a little bit more delayed. Bar 5, what did we do on bar 5? Well, bar 3 trapped traders. Somebody sold above bar 2, betting that this is already 2 legs up, 1 pullback 2, middle of a trading range. They'll sell above this bar, and bulls will not buy above that bar for the same reason. And then we get bar 3, and that breakout traps traders. And now we have support at the bar 2 high. And that's just about exactly where bar 5 tested. But now bar 5 is a high 1 buy with a bear body with a lot of overlap. Yes, this will likely get a second leg, but we may get a weak attempt at a second leg here, only to pull back deeper and then rally for the second leg. So with bar 5, high 1, probably more sellers above, and then bar 6, bull bar closing on its high, but bad context. The bulls really need immediate follow-through on the next bar. Otherwise, we may have 2 legs up and a failed breakout of a trading range and the prior day's high. And then we went outside down on 7. 7, strong enough breakout for a second leg. Maybe it's a leg 1. I think bulls have to get out below 7 if they're long for any reason, and it's okay for bears to sell. The problem is the rally, the attempt up by the bulls is fairly tight, and the odds are they're buyers below. We don't know if they're at the midpoint. We don't know if they're, let's see. So bar 5, we did test the midpoint. We don't know if there's buyers below 2, buyers below 1. We don't know where the buyers are, but the odds are this rally will lead to a second leg up, and there are buyers somewhere below. 8, decent entry bar for the bears, but much smaller than 7, and lots of overlap. 7 overlapped 6, 8 overlapped 7, so consecutive bear bars, probably always in short, but not as strong as it could be for the bears. 9, we went a little bit lower, but what happened? We broke out and we pulled back. 3 consecutive bear bars, 3-bar micro channel, good for the bears. Context, not great. Big up, big down. Odds are sellers above. 9's a bad, high 1, or you can call it a high 2. High 1, 5, high 2, 9. In any case, there's probably sellers above 9 and a second leg down likely. Inside bar 10, low 1 short, still on the micro channel, sell below 7. But in this environment, traders are likely scalping. Trading range price action, big up, big down. Odds are there are buyers below 1. Most breakouts of trading ranges fail. Bar 11, we sold off again, only to rally into the close. We have a micro double bottom with bars 9 and 11, but also bar 1 and bar 11 double bottom and a micro double bottom. So we're finding support. The attempts down by the bears, not all that strong. We may have 3 legs down, 5, 9, and 11, but the channel down is tight, still a micro channel, probably sellers above 11 for a second leg down. And then instead, traders sold the close of 11. We sold off on 12. But the problem with bar 12, a few problems with 12, and the entire sell-off from 7. I said 7 was a decent bear bar, and a second leg down was likely, but I also said it had a lot of overlap with the prior bar, and the follow-through bar was smaller than the breakout bar, and that's a sign of loss of momentum. If the bears were really strong, they'd get another bar like 7 on bar 8 down here, but instead it's a much smaller bar. We sold off on 7, pulled back into the close, rallied on 8, sold off on 8. That's 2 legs down already. And then maybe we rallied on 9, sold off on 9. But tight enough down for a second leg, and now we possibly have a second leg. We may even have 3 legs down, bar 5, bar 9, and bar 12. You can also draw it this way. There's a couple of different ways, but either way, the third leg is in the same area. So there's support. Bar 12 was a breakout attempt of the bottom of this trading range. But a late leg, leg 3, and just look at the sell-off. The bars are not uniform in size. We have dojis, opposite bars, tails below and above bars, and the context isn't great. Breakout of bar 1, but failed breakout. So there might be more buyers down here. And then bar 13. 13 rallied and then sold off into the close. What's interesting here is that on a smaller time frame, this is probably a major trend reversal, because bar 12 is a bear trend bar, and that's a bear trend on a smaller time frame. But then we rallied into the close of 12, and then we rallied on 13, and that's a deep pullback. Think about from the high of 12 to the low of 12, and then this pullback. That's about a 90% pullback. That's very disappointing for any trader who sold down here. So what we have is a bear trend, a trend line break, then a retest. This may be a higher low on the close of 13, higher low from the low of 12, higher low, major trend reversal. So it might be more buyers on the close of 13. Again, 3 legs down, a couple of different ways to draw it. Failed breakout of support and major trend reversal. 14, we rallied, big bull bar, but all of a sudden we're back to the upper third of the trading range. So traders may scalp here and bulls may look to take profits, but strong enough bar, second leg up likely. 15, follow through, but much smaller than 14. Same problem as 7 and 8. If 14 is such a strong bull breakout, why is 15 such a small bar? Also, we rallied on 12 and 13, pulled back, rallied on 15 or 14, pulled back, and then rallied on 15. That's already 2 or 3 attempts up to the top of a trading range, but 4-bar micro channel, bad sell signal. 15, probably buyers below. 16, bear reversal bar, top of a trading range. Bulls may exit below 16, others may look to buy here for a second leg, but at the top of the range may be a little dangerous to buy here. Never triggered the sell, and then the bulls had another attempt up on 18. Now think about it. Let me back up. We had the stop order buy, the high one on bar 5, and we triggered it on 6 and then immediately reversed on 7. So that stop order was retested on 16, and you can see what happened. Traders were trapped here. Bulls who bought above 5 trapped into a bad long. Bears who did not sell missed a decent swing down, and that leads to sellers above, resistance at that price, and that's what we got on 16. Now this looks like a minor reversal after a 4 or 5 bar micro channel, but it's enough disappointment that the bulls will look to sell above this bar. So now 18, what happened on 18? 18 is 2 or 3 legs up. We rallied on 13, pulled back, rallied up to 16, pulled back, rallied a third time, top of a range. And look at 17 and 18. 17 went up, then went down, and 18 went up a second time. That's 2 attempts up, and 18 overlapping all the bars to the left. 18 really needs immediate follow-through, otherwise bulls will probably be quick to exit their longs. 19, a decent bear bar, sort of similar to 7. To me, 19 is a bar that always in traders have to exit below. Bulls, if they bought for any reason, have to exit below 19. Therefore, bears can sell below 19. 19 is a double top, micro double top, and a decent bear bar at the top of a trading range. Possible opening swing, hoping for bears can sell here, hoping for maybe a measured move down of the opening range. And then some follow through, 20, 21. Decent follow through, but not great. We sold off on 19, pulled back, sold off on 20, pulled back, sold off a third time, and then 22, a little bit climactic. This may lead to bears taking profits. If you're in a swing trade, you really want the market to move in a steady way. You don't want the swing traders to get shaken out. And parabolic moves will shake traders out, especially a parabolic move, climactic move, to the bottom of a trading range. So this might lead to some profit taking. The odds were the sell-off down to 12 would get a second leg after a deep pullback. And the first test target is the bar 12 close. Next, the bears would like to get to the low of 12. And also, let me back up. I said 1 through 4 was a strong enough rally. A second leg up was likely. But in a trading range, you typically get deep pullbacks and then delayed second legs. And that's what we got here. Deep pullback, 2 or 3-legged pullback, and then a delayed second leg. And the same is true for the bear breakout. The breakout isn't all that strong, but it's enough that there's probably sellers above, and the bears will likely get some sort of second leg down. 23 tested the low close of 12, only to reverse up. Micro channel for the bears, strong enough, second leg down likely, but bar 23 is disappointing, and it will probably get a second leg, but 24 might be the second leg. Rallied on 23, pulled back, rallied on 24. This is a 2-legged pullback in a bear trend on a smaller time frame, and that's why traders sold the close of 24. And then we had a second attempt up by the bulls, 1, pullback, 2. So again, similar to 24, 26 is more of a sell the close bar, because this bear micro channel is strong enough. The first reversal will likely fail and will likely get a second leg down. The bears trying again on 27 to get a second leg down, but then failing on 28. The bears really needed follow through here. The problem here is that now 28 is an always in flip. Bears, short for any reason, probably have to exit above 28, and that means bulls can buy, taking a chance. We get an opening swing, and maybe the low of the day is here, and we go for a measured move up. They can buy here. We're about 2 hours into the day at this point. If we just pause and take a moment to think about the day structure, does this look like a trend day? Of course not. It's not a bull trend. It's not a bear trend. It's totally sideways. And it's trading range day. And it will likely remain that way. So I suspect we'll have sellers at the top, buyers at the bottom, and trading ranges often move in 2 or 3-legged pushes. That's what we've been seeing so far. 2 legs up, 1, 2, 2 legs down, 1, 2. Maybe this needs a second leg, pulled back, maybe we get a second leg up. This is why leg counting is so important, especially in trading ranges. When the market's in a trading range, breakouts are minor, and it's really important to count legs. When you're counting legs, you're counting the number of attempts by either side. And you've heard Al say, the market will often try something 2 times, and if it fails, it'll often try to do the opposite. So if the market's already tried to go down 2 or 3 times, it'll try to go up. If it tries to go up 2 or 3 times, it'll try to go down. And it just does that back and forth on repeat over and over in a trading range. Decent entry bar for the bulls on 29, but same situation as 7 and 8 and 14 and 15. 27's a bigger bar. 28's a bigger bar than 29, so loss of momentum and a tail. So we rallied, pulled back, rallied a second time. Now 3 pushes up. 24, 26, and 29. But this is an area where I said I think bears have to get out, bulls can buy, and the 28, 29 will likely get a second leg up, so we may have to test the top of the range. Doji, probably buyers below, weak reversal attempt. Outside up, might be heading up for a second leg. Another weak doji, weak reversal attempt, similar to 30, buyers below, likely. Tight channel, should probably get a second leg. And then another bar outside up. But now, count the pushes. 1, pull back, 2, pull back, 3 pushes up, testing resistance. Any trader who bought the close of 18 was trapped, and they suffered a deep drawdown, and on the retest, they'll probably look to exit up here. So you have bulls looking to exit longs, they're sellers. You have bears expecting a second leg down after this, and they are also sellers. The channel up is tight. We may need a second reversal, but it might be dangerous to look to buy up here. Inside bar, it's a bear bar. It's a weak buy signal, probably sellers above. We tried to break out, but look where we tested. The close of 18, and then we found sellers. And again, let's focus on stop orders again. Any trader who bought above 18 was trapped. Let me just snap it. Traders who bought above 18, trapped on 19. You can see we've retested that stop order only to find sellers. So now it's 3 or 4 attempts up at the top of a trading range. If you bought above 28, it's really hard to hold long after you see what's happening up here. You really want sustained buying, and you want momentum, and you want limit order traders to get trapped. But right now, traders selling above anything, sell above 30, you had a chance to exit without a loss. You sell above 32, there's overlap, you could avoid a loss. Sell above 33, you could avoid a loss. And that shouldn't be happening. If this is a strong rally, limit order bears should be getting trapped. Inside bar, rally, pull back, another rally, but a micro double top with over here, and now a third lower high. So it looks like we're finding resistance up here. Bear breakout 37. That's enough of a breakout that a second leg down is likely. 36 was not a very good stop order signal bar, but the context was okay. But the point is, any trader who bought below 36 or any of these bars or did not sell, they're trapped. 37 went a distance that trapped bulls into a losing trade and trapped bears out of a winning trade. So likely sellers above, maybe sellers on a pullback. Instead, they sold to close. Consecutive bear bars, one of them closing on their lows. Probably an always in flip, going at least a little bit lower, might be getting a second leg down from this. But now you're back in the middle of the range, so traders probably prefer to sell a pullback, but again, strong enough breakout, second leg down likely. Then a deep pullback, 39. We're testing the high of yesterday. By the way, we've tried 3 times to break out of yesterday's high, and all 3 times we've failed, and we found sellers. And that's a hint that, just think about it. We're probably not breaking out of yesterday's high. And if we're not breaking out of yesterday's high, we may have to test the lows. What about buying 39? I would not, because it's a 4-bar micro channel, strong enough bear breakout, second leg down likely. This might be a leg count reset. And you're at the top of a trading range. So for me, it's a deep pullback, and it might be 2 legs down, 37, pullback, 38. But I think there's probably more sellers up here than buyers. 40, small bar, we're testing that stop order, 36 low. I suspect we'll find sellers there. And then we ended up finding buyers. Big bar, small bar, another big bar, similar to 1, 2, and 3. But double top of a trading range expansion, compression, expansion, parabolic, it's a late leg, 1, pullback, 2. The bear breakout will still likely get a second leg, and If you think about it, on a smaller time frame, it's a bull trend, a trend line break, a retest, and the bear's looking for some sort of major trend reversal. Bulls want trend resumption and a second leg up, but the momentum is bad. Bull trend bar, and then weaker follow through. Bull trend bar, weak follow through. Tails above bars. This is 2 or 3 pushes up on a smaller time frame. The bulls trying hard, but unable to break out of this high. They tried, they keep trying to get there, but there is no momentum. And at some point, we're at the top of a trading range, and bulls will eventually give up, and bears will take control again. 45, bull breakout attempt, but hardly closed above, still closing within the trading range, really needs follow through. Then a bear reversal bar, it's an inside bar. I think bulls have to get out below 47 or 46, too much of a chance, or too much of a risk that we're at the top of a trading range with several pushes up. And we could test all the way back down to the 38 low. Bull reversal bar, high 1 buy, but top of a trading range. Traders will more likely sell above a high 1 at the top of a trading range. And that's why we sold off 48. We actually didn't even get above 47. 48 bear breakout, probably going at least a little bit lower. But lots of overlap with the prior bar, not very good for the bears, so very deep pullback. But probably sellers above 48, and second leg down likely, so probably more sellers up here, and we may have to go lower. Now we have 2 legs down. The bull's hoping we can stay above yesterday's high, bull breakout, 2-legged pullback, but overall, just look at the day. Very sideways. Looks like a trading range to me, and it looks like we're at the top of the trading range, and the bottom could be all the way down here. 51 bear breakout, sort of a breakout pullback. 51 broke out, pulled back into the close. 51 might be a sell the close bar. You could also sell above it. It's a bad stop order buy. Tight bear channel, second leg down likely. 52 a weak reversal attempt. Maybe it's a trendline break, but it's not all that clear. Maybe that's the bear trendline. You can see we tested it, but did not clearly break it. And probably sellers up here and the close of 52, looking for a retest of the 38 close at least. Another bear breakout and a pullback, maybe a sell to close bar. But then 54 pulled back again. 1, 2 reversal attempts. Do bears exit above 54? Maybe. It's not a very strong bar. The channel down is fairly tight, and this may be the first trendline break. And the odds are the bears will get a second leg down. Yes, it's 3 pushes down, 48, 51, 53, but it's tight enough that it's a breakout on a higher time frame. And even if we pull back, the odds are we'll get a second leg down. The bears starting to get their second leg, but now we have support at the 38 close. Bears hoping we'd get a breakout and a second leg down here, but instead we reversed. So anyone down here, 38 close area, was trapped, and that becomes support. But look what happened on 58. 38 or 58. The 38 close should have been support, but instead we broke far below it, and we pulled back. If a bull bought here, expecting this to be the bottom of a trading range, 58 trapped them, and they'll probably be quick to exit. This bear breakout will likely get a second leg down, probably sellers above 58. Reversal attempt, but no trendline break, and the first reversal attempt in a 5-bar bear micro channel will likely be minor. A couple of attempts up by the bulls, but maybe just a 2-legged pullback on a smaller time frame. Another push, 61, so we rallied. We rally on 58, maybe pulled back, rally on 59, pull back, rallied a couple more times. But we're still completely below the moving average here. And this breakout by the bears, all the way from up here, is tight enough for sellers above and a second leg down. Bulls trying to get the reversal. Now we have a 4 or 5 bar bull micro channel. That's disappointing for the bears. a couple legs down here, maybe a couple legs down here. The bull's going to look to reverse this and now get a second leg up of their own. 63, reversal attempt, but after 5 consecutive bars with really a 5-bar micro channel. The first reversal might be minor. 64, bull's looking for resumption, high 1 buy, but middle of a trading range, not ideal. The bull's trying again, but bad follow through. 66, after the bull breakout. 65, now we have 2 legs up after a pretty decent sell off by the bears. And then surprise, 67, might be a second leg trap. The problem with 67, it's a big bar. It's also a late leg. It's leg 2, if not leg 3. So it might be 1, 2, 3. Or it might be simply 1, pullback, 2. Second leg traps are common in trading ranges. Whenever you have acceleration to the bottom of a trading range in a second leg, you have to be cautious. So if you're short, you really have to be careful on the close of 67 because this could easily rally right back up. Disappointing follow through for the bears. 68. So we have a bear trend line break, retest. Reminds me of bar 13. Might be buyers on the close of 68. 69, bears going for another, attempting to sell off another time, but now it's 1, pullback, 2. Might be more buyers down here. And then 70, bull reversal. 70 is a bar that bears have to exit above, and therefore bulls can buy, taking a chance. We have 2 or 3 legs down to the bottom of a trading range, decent signal bar. Entry bar, not great, but if you bought, you can ask yourself, if I was flat, would I sell here? If the answer is no, then you can hold long. 72, a deep pullback, retesting all the way below 70. Bulls who had a stop below 70 trapped out on 72. Market sold off, ran the stops, only to rally again. So now you have bears selling below here, trapped into a bad sell, and bulls possibly trapped out of a good long. 73, beginning to race up, but might already be 2 legs up, and we're coming up on resistance. Breakout point 63, breakout point 65, 66. Probably sellers up here. And like I said, 2 legs up. Pause bar, inside bar 74, but probably buyers below. 3-bar micro channel. 75, bears hoping to get the reversal and maybe a second leg down. But a couple of small bars, lots of overlap, and 72, 73 is likely to get a second leg, even if it pulls back first. 76 might be the start of that second leg up, 1, pullback, 2, but the upside here might be limited with all the trading range price action we've had. 77, a strong bull bar, but again, you have to be on second leg trap watch. This might be leg 1, pullback, leg 2, maybe 1, pullback, 2. In any case, it's acceleration to the top of a trading range. So if you're a bull holding long and you start to see this hesitate, you have to be quick to exit. And then 78, reversal. Tight enough that this will likely get a second leg up, but if I was long, I would probably exit longs below 78 because there's too much of a risk. It's 2 legs up to the top of a trading range with a decent bar, 78. Then we just went sideways into the close. For the trades I took today, before I get into that, I want to say, with what I've been working on with my system, and I've been talking to Brad and listening to what Brad has been saying, and he's saying all the same things that Al Brooks talks about. Focus on stop orders, focus on swing trading, try to find the opening swing, focus on stop orders, keep it simple, all that. And today, with all of that in mind, and one more thing, this is something that I think it's worth looking into. I'm curious if anyone looks into their trading results and you look at the times of your trades, I wonder, how many days have there been where you look pretty good on the open, you make money on the open, but you trade all day, and what you do is you end up giving back a bunch of the profits you made, maybe half of what you made, maybe all of what you made by the end of the day. And if you had just stopped trading at the end of the second hour, maybe, you would have been good for the day. And I know I'm guilty of that. And there's this belief that you have to sit here and watch all 81 bars. You have to watch every tick. At least this was my belief. I'd listen to Al in podcasts and interviews, and he'd talk about how he's watched every tick of the stock market for 30, 40 years. And I think most of us aspire to be something like Al, and I want to follow in Al's footsteps. I want to do what he did and become the trader, sort of like a trader that he is. But the reality is you don't have to trade all 81 bars, and you can actually do really well if you just trade the open. And if you can do well in the open, I always think back to, I think Al talks about this in his third book, the Reversals book. At the very end of the book, he's talking about putting it all together, and he has a list of maybe 70 or 100 things, I can't remember. But one of those bullet points was, if a trader can just make 2 points a day in the Emini, and if they trade 50 contracts, then they'd make 7 figures a year. If you really think about that, you don't have to make 40 points a day. If you can make 2 points a day consistently and just increase your volume, then you can make a living as a trader. And a lot of these things are just kind of clicking for me and coming together, and that's been my mindset lately, and I took that into today. So I did not trade yesterday. I had a few appointments. So yesterday I took no trades. But today I traded just the first couple hours. I thought about buying the high of 78 because after bar 1, because I trade the SPY, and the market closes on bar 78, 4 p.m. Eastern time on the ETF. But on the futures, we have 3 more bars, and then we go into the Globex session. But anyway, I thought about buying above 78 because bar 1 broke out. That's the breakout point. I thought it would get a second leg up, but I missed that buy. But I watched this rally and ended up buying about the midpoint of the bar 2 high and the bar 4 low. So I got filled on bar 5. So I get long at the middle line here, and I see bar 5, and I ask myself, well, this is a high 1, so if I were flat, would I buy above bar 5? And for me, the answer was no. So because of that, when we rallied above bar 5 on bar 6, I just took my profits there. My target was higher. When I took the trade, my expectations were higher, but a couple things. One, let me just find my entry again because I just want to show the trader's equation. The low of bar 5 was my actual risk. The middle line was my entry. So from this lower line to the middle line, that's my actual risk, that's my entry. Here's 1 times my actual risk, and then here's about 2 times my actual risk. So you can see, by exiting at the high of 5, I'm getting 2 times my actual risk. The trader's equation is based on actual risk, and anything twice your risk or more is a profitable, positive trader's equation. So I was okay with exiting there. And I want to talk a little bit more about that. Whenever you're in a trade, you're holding a position. Al talks about there's no such thing as other people's money. And what that means is it doesn't matter if you bought the low tick of bar 5 and the market rallies. That does not mean you have no risk on the trade. Your risk is from the market price to your stop, wherever it may be. So if you're at a profit, that money's in your account. and that's open risk. That does not mean there's no risk on the trade. So with that said, if you're holding a position, that means you're willing to enter. So in this case, if you're long, if I'm holding a long, I have to be willing to buy at every second during the trade that I'm holding it. And that's why I said on the close of 5, it's a bad high 1, top of a trading range, maybe expanding triangle. Whatever reasons I may have, I would not buy above bar 5. Therefore, I cannot hold my long position above 5, and that's why I exited. And then I bought below bar 11, and this one was interesting. I think I learned something about myself here. I thought it was reasonable, and I had the right idea. 3 legs down here, 3 legs down here, a couple of ways to draw it, and I thought the rally would get a second leg after a deep pullback. So I was willing to buy here. I had a stop, a measured move down of 11, so I didn't get stopped out, but I exited at break even, I think on bar 12. So I really did not like entering that trade against bar 12. And looking back, so I didn't do anything after that for a little bit. So looking back, what I really almost wish I had done or thought about differently was wait for that breakout on 12, 3 legs down, and then wait for the confirmation that it fails, and then look at the trendline break, the retest. And I like that trade there by the close 13. Had I bought the close of 13, 15 would concern me because of the smaller follow-through bar. I'd be quick to exit up here. And then I'd probably get out below that bar, but it did not trigger, and I would get out above bar 16. Probably sellers above there. And if I didn't, I would certainly exit below 19. And speaking of that, because I think 19 is an always-in flip, bulls have to exit, then I think bears can sell. Because of that, I sold below 19, taking a chance. We have a double top, maybe early high of the day, and I wanted a swing trade. I wanted the range of the day to double. I wanted to fall below bar 12 and go for a measured move down. That was the plan, taking the trade. But 22 was a little bit climactic. I actually took some profits. I took partial profits at the high of 13, but when the market broke straight through it, I sold again there on bar 23. But then 23 disappointed me, and I would have exited above 23, did not trigger. I would have exited above 26, that did not trigger. And then I ended up exiting above 28. And like I said, I'm just trading the first couple hours of the day now, so that was it for me for the day. So I exited there, and that was it. Stop orders today. Probably buyers above 1, 2. Sellers below 7. Not the craziest buy above 13, even though the signal bar is weak. I do think after 3 pushes down and low in a trading range, I think bears have to get out above any bar. So 13, probably buyers above. Stop orders sell below 19, 20, maybe 22, but you need momentum. Otherwise, you're just selling low in a trading range. Stop order buy above 28. Stop order above 39. Up here, maybe 46. But better to wait for the breakout. You see 48. Maybe you sell 49 or 50. Over here, a few legs down, bottom of the range. You could buy above 59. I would exit longs below 66. So 66 could be a reasonable stop order sell. 70, reasonable buy, but you may have been trapped out with a stop right below it. And then 76 might have been an okay buy as well. Limit orders today. Buyers at the 2 high, sellers above 5. Buyers below 11 or 1, somewhere down here. Sellers above 16. Sellers above 25, sellers on the close of 26. But then buyers down here. Bad sell signal 26, tight trading range, bottom of the range. And then weak reversal attempt 30 after a bull breakout. Buyers below 34. Bad high 1, 34. So probably sellers above here. A few legs up, top of the range. Bad sell signal 42, double top, but 4-bar micro channel. Bad signal bar for selling. Buyers below. A bad buy above 51, sellers above. Same with 53, sellers above. Same with 58, but more dangerous to sell above here after 2 or 3 legs down. You may get a deeper pullback. Buyers below 62, tight bull channel, second leg up likely, just a scalp. 63, bad high 1, sellers above it. Low 1, 68, but bad follow through, second leg trap, buyers below 68. Buyers below 71 or 70 and 69. Maybe a low 2, so low 1, 71, low 2, 74, but more of the bottom of a trading range than a bear trend, probably buyers below. Sellers above this swing point, and that's about it. Today was a horizontal trading range day, all day. And where do we go Monday? We rallied, we had a deep pullback, breakout mode. It looks like we're rallying to the upside, but I mentioned the momentum was weak. And I do think we have sellers above. I think the momentum is weak. We're not going up with much of a sense of urgency. We may have to go higher to find sellers, but I think if we do go higher, we will find sellers. And I think the bear breakout will get a second leg after a deep pullback. So we're in a trading range. We have a bear breakout. We're getting a deep pullback and then a delayed second leg. And it goes both ways. Bull breakout, deep pullback, delayed second leg. So we may get to a new high. I don't know if we're going to get a higher high, a lower high, a double top, but I do think there are sellers somewhere up here. And right now, the bears don't have much to sell. Really no good bear bar, just bull bars and bull dojis in the past 5 days. So it looks like we have to go higher before the bears look to sell. All right. Thanks everybody for watching, and I hope everyone has a good weekend.